Okay, welcome to Clinical Traders. It's the 5th of May 2019. This video is not financial advice, I'm not offering it. It's purely a discussion about the gold sector, particularly a gold company, and it's not advice. It's not a recommendation to buy. It's just, this is the situation, it has potential. Make your own decisions, seek professional advice. Okay, I'm not a trained financial advisor, so I can't give advice. Okay, all right. You're looking at the web page for West African Resources. Okay, here it is up here. Maybe write it down if you wish to visit it. Otherwise, don't. And it's listed on the Australian Stock Exchange under the code of WAF. It's written right here. Alright, so by all means visit it. It's one of quite a number actually of Australian gold miners that are located in Africa. In this case it's in Burkina Faso. It's a poor country and that brings risk with it. Alright, so if gold was to go through the roof in terms of price, I'm sure that people in Burkina Faso would want to get their hands on it. So there are risks with these types of mines. Other examples are Resolute Gold, who have the Bibiani project in West Africa, I think it's Ghana. You've also got Perseus Resources, also have mines in Africa, and quite a number of others. I think Bellevue Gold, perhaps, maybe. Not uncommon to see Australian miners operating in Africa. However, this mine has something different about it, and that's why we're talking about it today. It's a mine that's in development, so it's not operating yet. They're building it. It's under construction, and it should be done it should be completed by 2020. I think they're talking about September 2020. Okay, all right. Now, when we get there to 2020, 301,000 ounces of gold in the first year. Okay, so they're stockpiling. That's part of the process later on, not at this point, but later on. So they're going to have an outstanding year. This is a huge number. Some companies that sort of are at this level, I know Saracen, for example, has 299, I think it is, 1,000 ounces a year. And that's a very, very profitable company. So we're talking about a lot of gold here, all right? That's the main thing. Once we get past that first year, though, it's going to start dropping away. We'll go back to what they're talking about 200,000 ounces per annum over the first 11 years, okay? At this point, the overall life of the mine is 11 years. So it will produce gold from 2020 right through to 2031, all right? So it's a long-term investment. We'll see what happens in terms of getting some profits out of that. Another important thing is that it's going to be a very low-cost mine. All right. We'll look at some photos in a minute, but you'll see that not a great deal of land clearing has had to take place, and so that reduces the cost quite a bit. And wages, of course, which is an important part of working out all-in sustaining costs. It's going to be fairly low. It's in Africa. And so that keeps costs down. Also, energy costs will be kept down for the same sort of reason that, if the country is not wealthy, then they can't afford high electricity costs. And so we're expecting low costs. This is in the first year, $497 an ounce. Gold's currently at $12.78, so you can see it's got quite a healthy margin. Once we get past that, we'll head back down to 217,000 ounces for the next 5 years, and after that it'll come down a little bit more to 153,000 ounces for the entirety of the 10-year mine life. Excluding that last year. Okay, so the region is a whole bunch of pits. Now I'll show you one here. Where are we? Oh, got to go a long way up. So pits. Here we go. Alright, so you can see we've got pits. So here's your M1 South pit. is you got it, the M3 pit, M1 North pit, M5 mineral resource. These are all different open pit mines. All right, some are small, some are large. Okay, so we've got a lot of open pits. So this is an underground mine. That means that they don't actually, well, I should explain actually before we go too far into this. You can see that, here it is here, the M1 South pit, okay? It's actually already been opened up, okay? But it was only, I think it was only by local miners. So it wasn't done very professionally. But the thing is that this gold vein stretches below the pit, goes all the way down into the ground. 500, 600 meters down. So there's still a lot of gold in there, right? And so that's what we're talking about here. So it's an underground mine, all right? And they expect that will take 6.5 years to get all that gold out of that vein that was running down into the ground, all right? They expect they'll get a total of 645,000 ounces of gold over that period of time. They're also hoping to increase probable reserves, so they're hoping to drill some more, find some more. At the moment, it's 21.6 million tonnes of ore, okay, that would be pulled out of the ground, and the average head grade for that would be 2.4 grams per tonne. So in terms of how does that sit amongst other miners, so certainly in Australia, we tend to get numbers from about 1.8 to 2.5. 2.5 is massive. 1.8 is probably closer to the mark for most mines that are holding their head above water. Okay, so we're in that upper tier, upper level, if you like. Okay. One thing to consider here that is a negative, but it's always going to be a negative because you need to get cash to build mines, is the where is it? Or maybe it's not on this page, but it's the upfront costs involved in getting your project up and running. It's building the processing plant, it's buying the machinery, it's piping the water to the dam. All that costs money, right? So it's a fair investment. Over the life of the mine, we see that costs go from 563. Where you see the A, that's Australian dollars, US is US dollars. So in US dollars, we'll talk in US dollars because that's generally how it works in Africa. So $563 over the first 5 years. And then over the whole life of the mine, 633 US dollars. This, by the way, is a very, very low number. Okay, just I guess in terms of comparing, Perseus, for example, they operate and they make a bit of money. So their all-in sustaining costs, I think, are around about $800 to $900 per ounce. Okay. If we were to look at a company like Blackham Resources, all right, their all-in sustaining costs are something like $12.70 or something similar, $12.70 US dollars an ounce, and yet the gold price is at $12.78. So they're not making, it's $8 an ounce. It's not much. Hence, you should check out their share price. It's not doing very well. They're not profitable. All right. Okay. Not much more to talk about here. We'll move over. I just want to take a quick look at this. This is the quarterly report. Okay, this is March 2019, so it's recently, and it's released on the 30th of April, so that's about 6 days ago it's come out. All right. I don't want to focus on this. This is stuff I've already covered, but look at all this going on here. Okay, they've built 60 camp rooms. They've poured concrete for the CIL tank and put in the ring beams that'll hold it in place for the foundations of the mill. The water storage facility is being built, a lot of earthworks, and they've had to put in 20 k's worth of pipeline to fill up the water storage facility. They've hired people. What else have they done? They've bought an underground mining fleet. It's delivered to site. They've got the second blast of box cut completed. Excavation and that's nearing completion. And here is some footage. Go back here. We'll play the footage. Here's the box cut. And you can see that it's quite a large explosion. They really blew that place apart. Okay, so this is the box cut. The way it's designed is that this actually, at this end is the entrance, and you run down here with your trucks, come around the corner, okay, and then you start where the end of the box cut was, which I think is right there. They drill into the ground, put tunnels in, and then they can access the underground ore. Okay, so that's that. Back where were we? We were here, weren't we? Alright, so yes, the box cut is nearing completion. That means they can start drilling and blowing into the side of the box cut to access the ore. So they'll probably start pulling that out at some point, stockpile it, make a big pile of the stuff, and that's why they'll get 301,000 ounces in their first year. Alright, contracts for mechanical equipment awarded. They've hired a lot of people for construction, operations, security teams, which you probably need in a place like Burkina Faso, where they do have a lot of issues. I won't go into that. And a lot of fabrication work, steel work, and actually we've got some photos down here. Get on down there. That box cut, by the way, just in this image. This is a design for the mining. Here's that box cut. So that's that ramp driving here. This is where they blew up, and they're going to put a tunnel in the end, and that tunnel will access this vein of gold. And they'll pull it back out through the box cut, up through the ramp, and take it via road all the way over to the ROM pad where they'll dump it. Okay, and then they'll go through the processing plant, and they'll turn that into gold, or separate the gold. Okay, here's the water storage facility. There are pictures of that. I'll show you in a minute. Pictures of that. It's large. It'll give you a bit of an idea about the scale of this operation, and of course the pipelines that will come over to the storage dam. Okay, here we go. So these are some of the campsites that have been built. They've got air conditioners. Isn't that nice? Looking after the locals. The admin area, nice tiles. Also we've got, here's that pipeline. So they dig trench, lay the pipe down, and this is ongoing. Imagine doing 20 k's worth. That would take a long time. Okay, here's that water storage facility. Here are the trucks. You can see how big it is. So it's quite a large area. A lot of work to be done there. Earthworks and so forth to get this thing up and running. Okay, so once the water storage facility has been excavated, they then line it with this plastic, okay, so the water doesn't seep down into the ground. Here's the box cut. You can see they've been hauling all the dirt out, trying to get it out so that they can access the tunnels. It says it's nearing completion, so that's good. Some of the equipment to move the earth. Sorry, mining fleet. There's the processing plant. Now it's probably just in here, I would think. Okay. Processing plant. And of course this is where they're going to put the SAG ball mill. Okay, this is what crushes the ore. Big ball bearings and tumbling. I'll watch Gold Rush, you'll know what I mean. But a big tumbling, it spins around, like a pipe spins around. You have big balls in it, and they smash the ore, break it up, and then they separate the gold. Here's the foundations for the CIL tanks. Carbon in leach, that's what it stands for. I couldn't think of it earlier. Carbon in leach, it's the way they separate the gold from the little fines that come out with it. Okay, no more pictures, don't need to see more of that. Okay, and then we take a look at the chart. I'm going to go straight out to the 1 monthly chart. Each bar is a month. Okay, so it was around about this time here, looking at the chart. Actually, let's go and look at the long-term chart. This is when they listed on the Australian Stock Exchange, and there was a lot of interest straight away. And then lost interest straight away. So we come back down in this long downtrend, month after month after month after month, and then something happened here. I wonder what that might be. Okay, look at this big month when the price went from 6 cents to 14.5 cents. So that's about 130% profit. Thank you very much. All right, no, I didn't buy it. I didn't even know about the company at this point. But this is when they made a their first significant discovery. I think they drilled out some extraordinary number of ounces. And it was something like 160 grams per tonne. And when they report that to the market, such a large number, investors get excited and they buy. And of course it paid off because the stock continued to rally all the way up to 44 cents. Who would be selling here? That would be near impossible to be buying right on that breakout and selling right at the top. Near impossible. Very, very hard to do that. But anyway, moving along. So then a little bit of lost interest. Then they pulled out some other extraordinary results, really firming up the size of the resource. And so interest started to come back. But that can only last so long because all the drilling in the world doesn't pull in the gold. You actually have to build and develop mines to get to a point where you can pull on a mass scale, pull that gold out of the ground. So over that time, while we wait and while they continue to drill and define the resource, we see the sell-off. And that sell-off continues right up until things like funding is sorted and until we start to see the development of the project. And that's what's happened in the last few months. Okay? And that's why I've shown you all these photos, because this is the stuff that's happening over the last few months. Okay? Now, this is also the point at which institutional investors will become interested in companies like West African Resources. So, look, we'll see what happens and play it by ear. Let's look at the weekly. Alright, so that's that downtrend we saw earlier. Topped out here, topped out again, and this is when things begin to turn around. So I've drawn an upward trend line here. Okay. I want to move this and get rid of this thing. Okay. This here is called a hammer. Okay. It's a bullish sign. It often indicates reversal. So you can have a hammer, and you can also have an inverted hammer. We have one here. All right. Also called a shooting star. There's all sorts of different names. Pin bar, you name it. I mean, there's lots of that sort of thing. Yeah, so we have one of those here. And so I would expect this could actually go higher. Probably top out here at 33 cents. And then from there, we'll have to wait and see. It could break out and keep going. It might pull back to the red line and then have another crack at it. Okay, we'll have to wait and see. So what will determine that? Well, their progress. Okay, so how they go continuing to develop the mine. Price of gold could also develop or change the situation. Make it perhaps less profitable and therefore less investors interested in gold miners. That's the sort of stuff that can occur at any time. Looking at the daily chart, I find this interesting because these 3 days, so what was that? That was the first, second, and 3rd of May. So that's this week. What's interesting about this is that many of the other miners, the Australian miners, actually headed south and went down. Okay, this has diverged and it's headed higher. To me, that indicates that there's a great deal of interest in this stock, and that it's probably in a bull run, probably. But we'll have to wait and see. Nothing is guaranteed. And if there were any hiccups along the way, this might turn over, roll over, and tank. Okay, that's just the nature of trading. Okay. Last thing we'll do, we'll have a quick look at gold. Actually, because I've been playing around with these a bit, I'm just going to go and put this in. We'll go with this one, doesn't really matter. Actually, no, it does matter. Which one did I do it on? Was it this one? Nope. Maybe it's this one. Oh, I get confused sometimes. Let's go with this is my watch list. One of them. There we go. Was it this one? Yes, finally. Okay. Right, so here's our weekly chart on gold. I drew this in earlier. We'll count the number of times price entered into the grey zone and then fell away. Alright, so we'll start in, well, it kind of punched above there. We'll leave that one out. So we've got March 14. Couldn't get through it. Alright. We've got June 2016. Couldn't get anywhere near that previous top. We had another crack here. This is August 2017. Couldn't get through it. And we tried a number of times right throughout March. We couldn't get through it. And again over here, that was March 2018 by the way. February 2019, couldn't get through it. And so here we are. Okay. You could argue that we are in a bull run. Absolutely you could. This is what we call a flag or a descending wedge. Alright. And they call it a flag because if we put in a trend line and we do this and we extend that, you can see it looks like a flag. See that? Okay, so some traders refer to it as a flag, but it is ultimately a descending wedge as well. Okay. So what will happen, this will keep going down until it gets the squeeze and it will either break down, hit this red line, or it will break up, as in represented by this green arrow, and it will start to head north. Probably have another crack at it up here. Okay, realistically. What happens there, we'll have to wait and see. But I think it will get there at some point. What's also interesting is that this upward trending red line indicates that the shorting interest in the stock is weakening because it just can't get lower and lower, and it's just not happening. So these lows are getting higher. Okay, so low, that's higher than this low, and then this low is higher than this low, and we'll see what this low presents here. Okay, you might expect that to turn itself around. Let's go down to the daily. So there's that descending wedge we talked about. You can see that on Friday it turned around, started to head north. This could be a bullish sign that we might actually get to this top area again and see what happens there, but we'll have to wait and see. Look, I've really enjoyed making this video. If you liked it, give it a thumbs up. Subscribe. Who knows, maybe I'll make more videos. But thanks for listening, and I'll see you on